Welcome to the Deep Dive, where we cut through the noise of earnings calls to get you the most important insights fast.
And today, we are definitely diving deep into the first quarter 2025 earnings call for Trisalus Life Sciences.
That's right. And looking at the numbers, they certainly had a pretty strong quarter to talk about.
Absolutely. Let's maybe start with those headline results. For Q1 2025, Trisalus reported net sales of $9.2 million.
$9.2 million. Okay. And that figure, it's more than just a number, right? It represents some real momentum.
It does. We're talking about a 42% increase compared to Q1 of last year, 2024.
42%. Wow.
And an 11% sequential gain just over Q4 2024. So good growth quarter over quarter, too.
And that kind of growth trajectory, it's not exactly new for them, is it?
No, it reflects roughly a 50% compound annualized growth rate since they first launched the product back in 2020. Consistent performance.
Okay, so that kind of, sustained high velocity growth.
Yeah.
It needs some explanation. What are the key drivers behind that?
Yeah, it really seems to boil down to increasing penetration in the market.
Yeah.
They're seeing adoption in new hospital accounts.
Okay, getting new customers.
Right. And then increased utilization within the accounts they already have. So existing customers are using it more.
Deeper engagement.
Exactly. And the strategic expansion of their sales force seems to be starting to, pay dividends.
And where does all this growth put them currently in terms of overall market penetration?
They estimate they hold about 10% market share right now, specifically within liver TACE and TARE procedures.
TACE and TARE. Okay, those are key terms here. Maybe for listeners who aren't, totally immersed in this specific medical tech space, what exactly are we talking about there?
Yeah, good point. So TACE stands for transarterial chemoembolization.
Okay.
And TARE is transarterial radioembolization, often using something called Y90 microspheres. Basically, these are minimally invasive procedures.
Right.
Used by interventional oncologists, sometimes radiologists, to treat liver tumors. They deliver therapy directly to the tumor through the blood vessels.
Kind of starving it or irradiating it from the inside out?
That's a good way to put it. And Trisalus's technology, specifically their keyed platform and the TriNav device, it's all designed to make that delivery more precise, more effective.
Got it. So they're making real inroads in these specific, pretty important procedures. Okay, moving down the income statement then, how did the bottom line look?
Well, the picture there showed improvement as well, actually. Both operating losses and adjusted EBITDA losses, they decreased compared to Q1 2024.
Okay, that's positive. Why the decrease?
It's largely just a function of that significant increase in sales volume flowing through.
Right, higher revenue helps.
Exactly. Combined with a reduction in R&D expenses as one of their pipeline programs is sort of maturing.
Okay, let's maybe unpack the why behind these results a bit more. The company highlighted several strategic priorities that, really underpin their Q1 progress. What were they focused on?
Yeah, they laid out 4 key areas. First, growing market share for their main device, TriNav, specifically in liver embolization.
Makes sense. Core market.
Right. Second, advancing their overall technology pipeline, just general innovation. Third, exploring new applications for their core platform, which is pressure-enabled drug delivery, or PED.
Okay, PED. We'll come back to that.
And fourth, preparing their pipeline asset, Nellamad, for a potential pharmaceutical partnership.
Those sound like pretty ambitious goals. What were some of the, tangible accomplishments in Q1 that show they're actually executing on these?
Well, they certainly position themselves as one of the fastest growing med tech companies in interventional oncology. I mean, that 42% growth rate kind of backs that up.
Yeah, hard to argue with that number.
And importantly, they continue to generate really compelling real-world data. Stuff that supports the value of their PED-based approach.
Real-world data, always crucial. Tell us about that. What did it actually show?
So this was an analysis comparing outcomes for over 600 patients treated using their PED technology, comparing them to a huge cohort, like 16,000 patients, treated conventionally without PED.
Okay, big comparison group.
Yeah. And the results were pretty striking. They showed statistically significant reductions in 30-day inpatient admission.
That's huge for hospitals.
Huge. Also, improved fatigue outcomes for patients, which is important for quality of life, and critically, demonstrated cost savings for providers.
Reduce admissions, cost savings. Yeah, those sound like major wins, especially when hospitals are facing all sorts of cost pressures. And they specifically called out the data supporting use in the sickest patients.
Yeah, exactly. As a key insight they mentioned, it suggests that technology isn't just, for the straightforward cases, but it potentially offers significant benefits even in really challenging patient populations.
And that kind of data must be powerful fuel for driving broader adoption, right?
Absolutely. It gives doctors confidence.
Okay, beyond the data, they also talked about expanding their reach, their commercial footprint.
Yes, significantly. In Q1 2025, they increased their unique ordering accounts by 39% compared to Q1 last year.
39% increase in accounts.
Yeah, adding 32 new accounts just in the quarter.
Adding new accounts is obviously great, but seeing increased utilization per account, which they also reported, that suggests those accounts aren't just, kicking the tires, they're integrating it. That means deeper engagement, doesn't it?
Precisely. It's not just about getting the device in the door. It's about driving consistent usage. And maybe a major catalyst for that usage could be a really significant step forward they achieved in reimbursement.
Reimbursement. Always key in medtech. What happened there?
So on April 1st, CMS, that's the Centers for Medicare and Medicaid Services, obviously a huge payer.
The biggest. Yeah.
They issued a specific code, a HICPC code, C8704.
Okay, C8704. And what does that code cover?
Think of it as a dedicated reimbursement pathway, specifically established just for TriNav mapping procedures. This is a really big deal.
Why is that?
Because effectively, it doubles the reimbursable use of their technology for Y90 radioembolization.
Doubles the reimbursable use.
Okay, that sounds huge. Can you break that down? Like, what wasn't consistently reimbursed before, and why does this mapping change things?
Sure. So historically, reimbursement for procedures like Y90, it focused heavily on the delivery part. Actually releasing the therapy.
Right, the main event.
Yeah. But the mapping phase, which involves guiding the catheter, confirming you're in exactly the right spot before you release the therapy, and that's critical for precise delivery using TriNav. That part wasn't always consistently reimbursed separately.
Okay, so it was sort of bundled or just not paid for sometimes.
Kind of, yeah.
Yeah.
It was inconsistent. So with this new C83004 code, physicians using TriNav for the Y90 mapping step now have a dedicated, clear pathway for reimbursement for that crucial planning and guidance part.
So it removes a potential barrier. Exactly. It takes away a potential financial hurdle and really incentivizes broader, more consistent use of TriNav in those Y90 procedures.
So it lets the physician worry less about getting paid for doing the complex mapping work properly and just focus on the best way to treat the patient. That makes a lot of sense.
It really does.
And they also had some clinical data updates related to Y90, didn't they? The TRAFI study.
Yes. So a known challenge in traditional Y90 therapy is that the initial mapping, often done with something called MMA, or macroaggregated albumin.
Okay.
That mapping doesn't always correlate super well with where the actual Y90 microspheres end up during the delivery phase.
Right. So you might think you're targeting one spot, but the radiation goes somewhere slightly different.
Precisely. So the TRIFI Y90 study specifically looked at whether using TriNav for both the mapping and the delivery could improve this correlation, this concordance.
And what did the interim data show?
It showed improved concordance, better agreement between the mapping and the actual microsphere delivery when using TriNav for both steps, compared to the traditional MMA mapping approach.
Okay, so suggesting a more precise delivery.
Exactly, which is obviously critical. You want to maximize the radiation hitting the tumor and minimize hitting healthy tissue. The study's closed now, and they said the data is being prepped for publication soon.
Precision seems like a recurring theme here, doesn't it? Precision in delivery with PED, precision in Y90 mapping. Did they highlight any product innovation in the quarter as well?
Absolutely. They launched TriNav Large.
TriNav Large, what's that for?
It's designed for embolizing larger arteries, typically in the 3 to 5 millimeter range.
Yeah.
That's relevant in procedures for larger liver tumors, but also potentially in other applications like uterine fibroids or larger goiters.
Expanding the toolbox.
Right. They also launched something called Tri-Guide, and they mentioned they're getting ready for the full launch of TriNav Flex soon.
TriNav Flex. I think that was previously called 2.0, wasn't it? What does that add?
That's right. It used to be 2.0. TriNav Flex is specifically designed for navigating really challenging tortuous vascular anatomy.
So like really twisty blood vessels.
Exactly. Vessels that are difficult to get through with standard catheters. TriNav Flex has improved trackability, making it easier for physicians to reach the target vessels in those complex cases. Again, it expands the range of patients and anatomies they can effectively treat.
Okay, so lots happening with the core TriNav product. Let's shift gears slightly and look at their pipeline asset, Nellamad. You mentioned a significant strategic shift there earlier.
Correct. So first, the update. They successfully completed phase 1 trials for Nellamad across multiple liver tumor types. Metastatic uveal melanoma, HICPC, cholangiocarcinoma, good progress there.
Okay.
They also completed enrollment in Perio 3. That's the phase 1 study for Nellamad in locally advanced pancreatic cancer. Final data from that pancreatic study is expected in the second half of this year, 2025.
And reaching this kind of clinical milestone seems to have triggered a change in how they plan to move forward with Nellamad.
Exactly. They're now transitioning to a partnership-focused strategy for Nellamad. The stated goal is to eliminate all internal Nellamad development expense by the end of this year.
Eliminate it completely.
That's the goal, while still preserving the long-term value of the program. And this allows them to really concentrate their internal resources and capital on the core PED platform.
Why pursue a partnership now rather than trying to, take Nellamad through later stage trials themselves? What's the rationale?
Well, the core reason seems to be technical, actually. Based on their research, Nellamad's optimal performance is achieved specifically when delivered using their PED technology.
Ah, it needs PED.
It seems so. They said it can't really be delivered intravenously. That would likely cause a dangerous systemic immune reaction, a cytokine storm.
Okay, definitely don't want that.
No. And standard needle injection apparently wasn't optimal either. So delivering it via PED is kind of the necessary pathway. Partnering allows them to potentially leverage a larger pharma company's resources and expertise for the drug development side.
While Trisalus still plays a key role with the delivery system.
Exactly. They remain essential through their PED delivery system.
That makes sense. It leverages their core strength. So what aspects of Nellamad are likely most attractive to potential pharma partners? What would they be looking for?
Based on the call, it sounds like potential partners are particularly interested in two things. First, how profoundly Nellamad appears to stimulate the innate immune environment locally, right within the tumor microenvironment.
Okay, targeted immune stimulation.
Right. And second, its safety profile demonstrated so far. They also made a point to highlight that Nellamad showed long-term effects and potential benefit in checkpoint refractory patients in a previous trial.
Checkpoint refractory patients, can you unpack that?
Right.
What does that mean, and why would that be of high interest to pharma?
Sure. Checkpoint refractory basically means patients whose cancer did not respond or stopped responding to standard immunotherapy drugs called checkpoint inhibitors.
Which are a huge part of cancer treatment now.
Exactly. So these refractory patients represent a really significant unmet medical need. There aren't great options for them. So a drug that shows potential in this specific population is highly attractive to companies working in immuno-oncology.
And Nellamad's potential here seems linked to that unique PED delivery.
It seems that way.
Yeah.
The ability to locally stimulate immunity via PED delivery without causing systemic issues appears to be the key differentiator here.
So by focusing their own resources on the PED platform, they're also positioning themselves to potentially benefit from a successful Nellamad partnership down the line, because that PED delivery is essential. It's intertwined.
Precisely. It's a strategy to potentially unlock significant value from Nellamad without shouldering the full cost and risk of late-stage drug development themselves. Smart, potentially.
You mentioned earlier they're exploring new applications for the PED platform beyond liver cancer. What are some of those?
Yeah, they're branching out. For example, they've launched the PROTECT registry. That's evaluating PED-based thyroid artery embolization.
Thyroid embolization? For what?
For patients with goiters, enlarged thyroids, who aren't good candidates for surgery or radioiodine or ablation. So it's a novel, minimally invasive approach for them.
Interesting. How's that going?
They say they've already treated over 40 patients in this registry with encouraging initial results. They're also exploring genicular artery embolization, or GAE.
GAE?
Yeah, genicular artery embolization for chronic knee pain, like from osteoarthritis, and further applications in uterine fibroid embolization, all through registry trials right now.
This really shows their view that the PED platform isn't just an oncology tool, right? It's versatile, potentially applicable across multiple vascular beds and conditions.
That's clearly the strategic bet they're making, yes.
Yeah.
Expanded the potential significantly.
Okay, let's bring this back to the financials in the investor context. how does the company's financial position look right now to support all these plans, the commercial expansion, these new PED applications?
Well, at the end of the first quarter, they had $13 million in cash on hand.
Yeah.
But critically, after the quarter ended, they successfully raised an additional $22 million in gross proceeds through a private placement financing.
So fresh capital came in.
Yes. And management stated on the call that this provides them with sufficient liquidity, enough cash to get through 2025.
Okay, one way through 2025. They also took steps to simplify their capital structure, which, investors often like to see.
They did. They reached an agreement with holders of 55% of their preferred stock to convert that preferred stock into common stock.
And why is that significant?
It removes a potential overhang, specifically something called the July 2027 reset provision associated with that preferred stock. And it just better aligns a large portion of their investor base with the common shareholders. Simpler structure, more alignment.
Management seemed to characterize their investment strategy right now as quite deliberate, even though it means they aren't, chasing immediate profitability this year.
That's a key point they really emphasized. While they're committed to improving EBITDA over time, they're intentionally prioritizing allocating capital right now to accelerate the development of these new PED clinical applications we just talked about.
Like thyroid and GAE?
Exactly. And also to fund the expansion of their commercial organization, that sales force build-out.
So spending money now to make more later.
That's the thesis. Their belief is that while this pushes out the immediate path to profitability, it will significantly expand their total addressable market and should drive much greater long-term value. It's an investment phase.
And speaking of that timeline, they did reaffirm their revenue guidance for the full year, right?
Yes, they confirmed their guidance of achieving at least 50% revenue growth for the full year 2025. That shows confidence in their current sales momentum and the expected ramp-up.
At least 50%, but they aren't guiding to profitability this year.
No, they were explicit about that. They do not anticipate being EBITDA positive or cash flow positive in 2025. Their current expectation, they said, is to become cash flow positive sometime in early 2026.
Okay, early 2026 for cash flow positive. Let's dig into that commercial expansion a bit more. How many reps are they actually adding, and how does that specifically impact the profitability timeline? You mentioned it was a factor.
Yeah, it's a major factor. So currently, they have around 45 people in their commercial team. That includes reps, clinical specialists, management.
Okay, 45 now.
The goal is to grow this to between 60 and 70 people over the next 18 months or so.
So a significant increase.
Yeah, and they emphasized its targeted hiring. They're looking for reps with a specific blend of skills, clinical knowledge, technical aptitude, and importantly, experience in building adoption for a new therapy. It's not just selling a commodity.
Right, it's more complex. So it's not just about hitting a headcount number. It's about getting the right kind of reps in the right places.
Exactly. And they acknowledge that new reps, especially in this kind of sale, take time to become really productive. Hiring is being layered in gradually. They expect the biggest impact on sales volume maybe in Q4 this year, 2025, and then really driving significant growth into 2026. They even quantified it. They said this commercial expansion accounts for approximately 60% of the reason for pushing out their cash flow positive target.
60% just from the sales force build. What's the other 40%?
The remaining 40% is due to the investment in those new clinical applications and registries, the GSC, the uterine fibroids, thyroid stuff we talked about.
Okay, that gives a really clear picture of where the capital is going and the expected timeline for return. How about that new CMS mapping code? It only became effective April 1st. What's the early feedback been like?
Early feedback, according to the company, has been very favorable.
Good to hear.
Physicians are reportedly using TriNav more broadly now and more consistently, especially since there's clearer reimbursement coverage for both the mapping phase and the treatment phase.
Makes sense.
Particularly as the full product portfolio, the standard, the large, and soon the Flex becomes available. It seems to be removing a hurdle, simplifying the decision process for doctors. Lets them focus on picking the best tool for the patient's disease, rather than wrestling with reimbursement ambiguity.
That seems crucial. And how are they seeing the usage trends shaking out between TACE and TARE procedures for liver cancer? Is one growing faster than the other?
Yeah, interesting point there. Historically, their usage was roughly balanced, maybe 50-50 between TACE and TARE.
Okay.
However, they noted that it's currently skewing more towards radioembolization, or TARE.
TARE is pulling ahead.
It seems so. And this aligns with broader market trends, actually. TARE is increasingly seen as kind of the number one local regional therapy for patients who are hoping to stay eligible for liver transplant lists.
Ah, okay. So it's a bridge to transplant or keeps them eligible.
Often, yeah. TACE still remains important, they said, for specific patient subsets, like those with neuroendocrine tumors, for example.
Yeah.
But TARE is where a lot of the growth is.
So the timing of that CMS mapping code, which specifically supports Y90 radioembolization, or TARE, seems particularly strategic then, given that TARE is already the growing segment.
It certainly appears to be well-timed, yeah. It positions them nicely in a key growth area within interventional oncology.
All right, well, it is time for our favorite segment where we put on our hypothetical investment committee hats and pitch a couple of potentially, let's say, wild yet plausible trade ideas stemming from the call takeaways. And remember, folks, this is absolutely not financial advice, just exploring scenarios based on the information shared.
Okay, all right, committee, listen up. Here's idea number one. You take the combination of that new CMS mapping code, C8now004, which really simplifies reimbursement for TriNav in Y90 TARE.
Right, the growing market.
It's the growing market. You combine that with the layered sales force expansion, which is specifically targeting high-volume TARE centers. Well, that combination could accelerate market share capture in TARE significantly faster than maybe current models anticipate.
Okay, so the company guided to at least 50% revenue growth for 2025. But you're saying if that reimbursement tailwind is stronger than expected, and those new targeted reps in key TARE accounts ramp up even slightly quicker than the typical, say, 3 to 6 months.
Then you could potentially see a meaningful upside surprise relative to that 50% floor, especially in the back half of 2025. And if that accelerated revenue growth happens,
it could pull forward the path to cash flow positivity.
Exactly. Maybe hitting that milestone a bit earlier than the stated early 2026 target. It's basically a bet on strong operational execution, meeting a powerful reimbursement catalyst, creating this positive feedback loop right in their highest priority market segment.
Plausible. Maybe a little aggressive, but plausible indeed. Okay, here's trade idea number 2, maybe leaning more into the pipeline side. It focuses on that shift to a partnership model for Nellamad, explicitly aimed at eliminating the internal R&D spend while trying to preserve the asset's value.
Right. So the thinking here is the market is likely modeling this Nellamad optionality with a pretty low probability of a major near-term event. It's seen as, further out.
Kind of a lottery ticket, maybe?
Sort of. However, the specific data points highlighted in the call, remember, that profound local stimulation of the innate immune environment, the safety profile shown so far, and that really tantalizing hint of potential in checkpoint refractory patients.
Yeah, that refractory population is key.
It is. Those are all areas of intense strategic interest for large pharma companies, particularly those heavily invested in immuno-oncology.
And crucially, because Nellamad absolutely requires their PED platform for optimal, safe delivery, a partnership wouldn't just be a simple drug licensing deal, would it?
Probably not. It could involve significant milestones, potential royalties, and maybe even preferred economics tied specifically to the use of the PED platform to deliver the drug. It locks Trisalus into the value chain.
So the trade idea is,
if a partnership is struck, especially with a major player who's actively seeking assets in challenging areas like pancreatic cancer or that checkpoint refractory population, the value unlocked could be disproportionately large compared to Trisalus's current market valuation.
Because it validates not just Nellamad,
but crucially, it validates their core PED delivery technology in a very significant way, a way that probably isn't fully priced into the stock today. It's definitely a higher risk play, banking on a potentially transformative catalyst event, but the asymmetry could be there.
Okay, committee, you have heard the scenarios. Again, to be crystal clear, this is not financial advice, just some thought experiments sparked by the earnings call on where potential upside or maybe even downside could lie.
So just to wrap up this deep dive then, Trisalus Life Sciences reported strong 42% revenue growth in Q1 2025. That was driven by increasing adoption and utilization of their TriNav device and the underlying PED technology.
Key strategic wins definitely included that critical new CMS mapping code for Y90 procedures, C80004, plus compelling real-world data showing both clinical and economic benefits for their approach.
Right. And good progress across their product pipeline, too, with new launches like TriNav Large, Tri-Guide, and developments like the upcoming TriNav Flex for those tough anatomies.
And they're making that clear strategic pivot with Nellamad, shifting towards a partnership model. The goal there is to reduce expense and focus their own resources on expanding the versatile PED platform into exciting new clinical areas like thyroid and genicular artery embolization.
Yeah. And while that investment in the Salesforce expansion and these new PED applications does push out the expected cash flow positive timeline to early 2026.
They remain confident in achieving at least 50% revenue growth for this full year, 2025. It really seems the company is focused on building robust clinical evidence, engaging the medical community effectively, and scaling their commercial efforts. All with the ultimate aim of, becoming the standard of care for complex embolization procedures, potentially across multiple different disease states.
And just one final reminder, the information discussed here is based on the company's earnings call, presentation, and discussion, and it is definitely not financial advice.
Absolutely. So as you process this deep dive, maybe consider the potential ripple effects of that new CMS code. Could it truly unlock accelerated adoption, especially in that growing TARE market? And what about the broader vision for the PED platform? Could these applications beyond oncology, like thyroid or knee pain, actually become meaningful growth drivers down the line? The pieces are certainly in place for a very interesting story to unfold over the next few years.